Hello, everyone. Good morning, good afternoon, good evening to you, depending on whichever part of the world you are tuning in from. I'm so grateful, thankful to be here with you once again this morning, though we are coming in a little bit later than expected and due to some technical issues. Thank goodness that things are quite fine right now, and thank you, Carrie, for backing up for me right here in this community. So thank you very much, Carrie, and glad to be back online and glad to be with you all here this morning one more time. So before we kickstart this session, let's quickly confirm that we are good to go. Can you see me? Can you see my screen? Can you hear my voice clearly? And please feel free to let me know in the comment section, as this will give me a confirmation that we are good to go this morning. All right, so let's see what we have in the comment section. I think I have a couple of comments right here. Okay, I can see 7407. Good morning to you. Hello 2895 659B. All right, good morning to you. Good morning, Cast. Good morning, Tula. All right. Okay, I'll take this as a positive confirmation that we're all on the same page here. And it's on this note, I welcome you once again to another promising edition of the X Trend Speed Live. My whole name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where I will be taking you on a trading journey through the financial market. So, as usual, in preparation for today's trading session, I've already conducted a comprehensive price action based technical analysis on all of the assets on our watch list for this week, utilizing simple technical parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of the assets on our watch list. And in fact, for this week, we have 4 financial assets. We have the US All Spot, we have the USTech100, which is popularly known as the NASDAQ. We also have the XAUUSD, also known as the Gold Spot. And of course, we have the EURJPY, which was introduced to us by one of us in this community in the name Fisherman. For those who are joining us for the first time, you are highly welcome on board, and you might be asking, because I can see Tula asking that, what is this all about? Well, we come here as a community in anticipation of the New York trading session, where we review and analyze our previous positions on all the assets on our watch list, and of course at the same time strategically position ourselves in such a way that we can catch any potential trading opportunity during the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time, and it's important that I would encourage you to stay tuned in to the end of the session and join our subsequent edition, as the more time you spend with us, the better you get to understand how this works and eventually be able to use the information in making your own independent trading decision. So once again, you are highly welcome on board. And Tula, I hope I was able to clarify what we really do here, and I hope to see more of you going forward. Susie MB, I see your comment. Thank you very much for checking in. So with that being said, here we shall be diving right into the business for today. And as usual, you know how we do it. The first thing we want to be doing before we go into the technical expectation is to see to keep tabs with the fundamental aspect of the market. And by now, you all know how these fundamental factors often manifest on the chart in technical patterns and, of course, price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And what we normally focus on the economic calendar are high impact economic event from the economies that affect the asset we are looking at. And for this week, we have the US dollar, sorry, the US economy, the United Kingdom, and of course the Japanese economy. Now, for today, August 17th, that is Thursday, we do not have any high impact events. So I will try to incorporate the medium impact event, as I would love us to have an insight into what majority will be looking forward to, since we do not have any high impact event. But bringing in the medium impact event, we have a handful of events to look out for from both the United States and the Japanese economic docket. So the first one here is coming in about 2 hours from now, and that is the initial jobless claims. And this is a data released by the US Department of Labor, and it's a measure of the number of people filing first-time claims for state unemployment insurance. And in other words, it provides a measure into the strength of the labor market in the US. A larger than expected number indicates weakness in the labor market, which of course has a negative influence on the US dollar, on the US economy, of course, while a lower data gives us a buoyant labor market. Now, if we look at the previous data here, it came in at 248,000 for the month of July. So we have a general consensus projecting 240,000, which is a little bit lower than the previous data, giving us a positive expectation. So we shall be looking forward to see what the actual data is going to be on that one. Then that same time too, we are going to be having the Philadelphia Fed Manufacturing Survey. And of course, this is a spread index of manufacturing conditions within the Federal Reserve Bank of Philadelphia. This survey served as an indicator of manufacturing sector trend, and it is interrelated with the ISM Manufacturing Index. And of course, and above, the expectation reading is considered to be positive for the US dollar, while anything lower is considered to be negative. Now, the previous data came in at minus 13.5, and we have a general consensus projecting minus 10, which is also on the positive side here. So we hope to see something higher than expected to boost the US dollar for today. Then we also have the consumer price index coming up much more later in the day, and this is from the Japanese economic docket, and it is released by the Statistic Bureau. And of course, it is a measure of price movement obtained by the comparison of the retail prices of a representative shopping basket of goods and services. The CPI is the most significant way to measure changes in purchasing trends and of course the inflationary status of a particular economy. Generally a high reading is seen as positive, while a low reading is considered to be negative. And since we are reviewing the EURJPY, so we'll also need to keep tabs with the expectation in this from this docket too as well. The previous data came in at 3.3% for the year on year, and we have a general consensus projecting 2.5%, which is not something palatable for the Japanese economy, but we are going to be looking forward to see what the actual data is going to be like. Now, as technical traders, what we are going to be doing here is to try and use the timing of this economic event in correlation with the current market structure to identify patterns and structures that we can use to anticipate and guide our trading decisions prior, during, and even after this event. So with that being said here, we shall be diving right into the chart. And of course, in the last 24 hours, we've been we've been doing pretty well, especially amongst the USD peers, but we're going to be looking at that in detail right now. So the first instrument we are going to be looking at this morning is going to be the US All Spot, which has actually done pretty well in the last 24 hours. Now let's run through what has really been going on in this market since the beginning of the week. And at a first glance, it is quite clear that we have been selling the US All Spot. Now, looking at what happened at the beginning of the week, what is it that we saw here that made us consider selling the US All Spot despite the very strong bullish momentum prior to the beginning of this week? Now, the first thing we saw on the 1 hour time frame was how price action was initially caught within a range. In fact, this lasted about 36 hours before we begin to see some significant movement in price action. So we had a range already identified at the beginning of the week, and you know how we do it in this community. Whenever we have a flat range such as this, we look out for break out of the resistance line for buying opportunity, or the breakdown of the support line for selling opportunities. And one interesting thing about this whole structure is that we also added another ascending trend line, which of course we identified on the higher time frame. We will be looking at the higher time frame in a moment, but for now, let's just use this as a reference point. So we have this ascending trend line also identified at the beginning of the week, and of course we agreed that as long as price remains above the ascending trend line, that we shall look out for structures and patterns that will support the idea of buying the asset. However, something interesting happened on Tuesday morning. As we will see, we saw the breakdown of that ascending trend line, retest of structure giving us a bearish signal, and the fact that price action remains below our week's key level at the $82 area was quite a beautiful signal that we are likely going bearish for this week. And in fact, we positioned ourselves below that structure, capitalized on this opportunity as we rode that move all the way to the downside. So for those who took advantage of that opportunity, well done to you. And during our live session yesterday, we acknowledged that price action has been caught within a consolidation phase, which further emphasized the uncertainty at that point in time. And you know what we're looking out for? We were waiting for a breakout or breakdown of that range to give us an opportunity to capitalize on any potential opportunity. And for those who had a buy position yesterday, I told us all to move our stop losses to an area around the $81 zone, which if you had done that, you will still be in that sell position as at this moment, as we also saw another opportunity to capitalize on that downtrend scenario when price action did finally break down that $80 mark. Very important level that is, to push price further to the downside. So price moved another, how many pips was that? Another 140 pips, 45 pips in our direction before this bullish momentum began. So for the first half of the week, it has been quite a profitable journey for us on the US All Spot. And for those who took advantage of this opportunity, well done to you for being on standby to capitalize on this move. And I do hope you moved your stop losses accordingly. If you had done that appropriately, you must have been taken out of this position with a modest size of profit. And once again, well done to you for doing that. Now that we're going into the New York session today, what is going to be our plans? Are we going to continue to look out for selling opportunities, or is it time to start getting ready for another wave of bullish momentum? Now, before we scale into the details of what is really going on here and how we intend to position ourselves ahead of the New York session, I would like us to scale up into the higher time frame so that we can have an holistic perspective into what is really going on in this particular market at this point in time. And if we are going to be doing that, we shall be scaling up rather into the 4 hours time frame, which was where we identified this bullish momentum. Of course, we saw how price action had remained bullish since the beginning of the month of July. And as a result of this bullish momentum, we had this ascending trend line figured out after connecting the series of higher lows, as you will see here. And you know how we do it in this community. As long as price remains above the ascending trend line, we have no business selling the asset. But if price breaks down the ascending trend line, then this will be a signal that we are about to witness a momentum shift. Now, if we zoom into the current structure, this is what we were able to come up with during the course of the week. We identified a key level at the $82 area, which we said we are going to be using to guide our trading activity for this week. And one interesting thing about that key level is the fact that it also shares a beautiful confluence with that ascending trend line, giving us a very crucial juncture in the market to look out for trading opportunities at the beginning of the week. And of course, when price broke down that key level and of course the ascending trend line, it was quite clear that it is time to start selling. And in fact, we have been selling, as you will see, as price action has finally broke down that $80 MAC back to the downside here. So at this point in time, what are we going to be doing today to capitalize on a trend continuation? Well, if we look at what has been going on here since last week, Thursday, you will see that price action, after testing a new high at the $84.40 level, we have witnessed a situation here where price action had consistently and uniformly found lower lows and lower highs. And whenever we start noticing lower highs in the market, it is a clear sign that price action is likely going to be going bearish at that point. Now, to make things a little bit clearer here, we will be connecting the series of lower highs here, as this is going to be what we will be using to guide our trading activity for today. So I would like to have this on all our lower time frames so that we can use it as a point of reference to guide our trading activity for this week, for the later part of this week. So I would like to give this a wine color to differentiate it from the previous trend lines, as this is going to be a key parameters in guiding us. So let's have our candle chart back and then do some little readjustment to capture the pivot highs here. So here we go. So we have a descending trend line now, which we'll be using to guide our trading activities for today. So what this simply means is that as long as price action remains below the descending trend line, we have no business buying this particular asset. So with the situation we have right now and the breakdown of the $80 MAC, and then you know what we look out for from a technical standpoint when price action breaks down a key level or key structure such as this, we expect that price is likely going to come back, retest the structure, and then incite a selling pressure to push price further to the downside, hereby giving us an opportunity to join the downtrend continuation. And one interesting thing about the $80 MAC here is the fact that it also shares a beautiful confluence with that descending trend line that we identified earlier, giving us a crucial juncture to look out for trading opportunities for today. So for those who had missed out on the sell opportunity, let's see how the market will react to that crucial confluence around the $80 MAC, which also shares coincidentally lines up with that descending trend line to give us an opportunity to trade. So we shall be looking at selling pressure below the $80 MAC to join a downtrend scenario. However, if price action goes on to break out of that descending trend line, then at this point we want to start considering a momentum shift. Now with this scenario here, a breakout of that descending trend line, if possible, retest of structure will give us a beautiful confirmation to join an uptrend. Now we don't know if this uptrend will be a form of retest of the ascending trend that was broken to incite another wave. That will now depend on what happens when price action gets into that level. But for now, we are going to be focusing on the $80 mark, where depending on how price action reacts to this level will determine what our next course of action will be for today. So you do want to be marking out this level, very, very important, the $80 mark, and of course that descending trend line, after which we want to remain patient and wait to see how the market will react to that level to decide what our next line of action will be. So a breakout will welcome buying opportunities, while continued selling pressure below the structures will welcome selling opportunities. So now, with the information we have on the higher time frame, can we now scale down into the 1 hour time frame to see how to capitalize on this move? So right now on the 1 hour time frame, you will see that we have a series of descending trend lines here, which of course has been supporting the bearish momentum we have been enjoying since the beginning of the week. Now that is the $80 level. Here you'll see how important this is situated. So it depends on how price action reacts to this level. So in fact, I also have a trend line here on the 1 hour time frame, after capitalizing on what happened in the last 24 hours, as you will see here. But one thing I will just say here is that let's remain patient. The most important level right now is the $80 mark, where depending on how price action reacts to this level will determine what we are going to be doing next. So if breakout happens, retest of that structure, we want to be joining a bullish move. But if selling pressure resumes, we want to get ready to sell the US All Spot. Then a further breakdown of the $78.60 level will make us capitalize on more selling opportunities. Now there's another thing I just notice on the structure here. Now if we look at when price tested the $78.60 level, which happens to be the lowest point price action has been for this week, we have noticed higher lows. And when we begin to see higher lows, it's a clear sign that a bullish momentum is gradually building up behind the scenes. And when we connect the series of higher lows, we have a trend line. So I will give this a green color to differentiate it from the previous trend lines we have, which of course we are going to be using to guide this bullish momentum. So if price remains above the trend line, then a breakout of the $80 mark will be what we need to confirm a potential uptrend. However, if price drops below the trend line, then we shall be looking out for selling opportunities, making us to join earlier than the breakdown of the $78.60 level, where we shall be maximizing the move to the downside. So let's keep this in mind. Let's mark these levels out on our chart. Then for the selling opportunities here, that is, if price decides not to climb into the $80 area and breaks down the ascending trend line, please note that we have the $79.50 level as an area to look out for selling opportunities if price drops below and retest the structure. So you want to be marking that level out too on your chart, as you will be needing it as a reference point to guide trading activities for today. So here we go, very simple setup here. So let's see how the market will play out in the next couple of hours. So if you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section below. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before I move on to the next financial assets. All right, so in the absence of no questions, I want to assume that we are all on the same page. I see your comment, Ilana Atta, Red Fox, good morning. And good morning to you. So, good morning, 8152. So, I think we should just move on to the next financial asset on our watch list, right? Sebilon 8. Good morning to you too. Glad to have you around. All right, so the next asset on our watch list for today is, of course, the US Tech 100. And the US Tech 100 has been doing pretty well in the last 24 hours, though the bullish expectation we were anticipating did it click, but thank goodness we were able to consider the potentials of sellers too as well, hereby making us to be on standby to capitalize on that bearish momentum. So far so good this week. We have had moment where we bought the US Tech 100, and we also had moment where we sold, and on both occasions we were able to scoop in significant amount of profit on this asset. Now, I would like us to run through how the week started for us here. Let's see what really went on and what are the things that made us make the decisions we made so far this week. Now, if you look at the structure on the 1 hour time frame, the first thing we observed at the beginning of the week was this range where price was initially caught within. That was between the 15,080 and the 14,960 level, to emphasize the level of uncertainty at that point. And you know how we do it whenever we have this kind of flat range. We want to be waiting for either a breakout of that range to happen or a breakdown to give us an opportunity to buy. And in fact, what happened here was bullish signals. Of course, we saw price break out of the resistance line a couple of times to give us a signal that we want to be going bullish for the week. And in fact, price action also broke out of that descending trend line we identified at the beginning of the week on our higher time frame, which further emphasized that bullish momentum we had. Now we bought at the breakout of structure. We also added more position to maximize that move at the breakout of the 15,150. So on both occasions, I think the first position moved about 180 pips and the second position moved about 100 pips, giving us roughly 250 pips before the bearish momentum began on this market, taking us out of that position with a considerable size of profit on that one. Then in the last 48 hours, we have been anticipating a potential trend continuation, that is price continuing to the upside based on the bullish signal we witnessed at the beginning of the week. And one of the ways we decided to anticipate the uptrend continuation was to consider this impulsive move and see this old bearish momentum that started on Tuesday as a retracement of that move. And when we used our Fibonacci retracement tool to project where this retracement faced my hand, we had our zone situated between the 15,100 level and the 15,010 area as an area that we shall be looking out for buying opportunity if we notice buy pressure around that zone. And in fact, for about 24 hours, price action remained within that zone, giving us clues that we might likely be seeing a bullish momentum. And one of the things we said here yesterday is that we will need a breakout retest of the $15,080 MAC for us to capitalize on that move, which of course never happened since we ended our live session yesterday. And of course, we said here that if price does not break out, then a breakdown retest of the $15,000 MAC, which happens to be our key level for the week, will be welcoming the sell position. And that was exactly what happened. As you will see here, that about 3 to 4 hours into the New York session, we finally saw the breakdown. And in fact, if you had missed out on that opportunity, the market came back a couple of times again on the 1 hour time frame to retest that structure to further emphasize the strength of the sellers around that area. And in fact, if you are taking advantage of that one too, Well done to you for being on standby as we saw price move over 150 pips move before this bullish momentum began. And I do hope you moved your stop losses accordingly. If you had done that, you must have been taken out of your position well. And for those who moved their stop loss a little bit wider and still remain in the position right now, well done to you. Right now, if you still have a current position running, kindly move your stop losses accordingly. And for me, I will be suggesting that anywhere above the 14,950 area seems most appropriate to move all stop losses to for this current sell position we are in right now. And of course, remember that we want to give enough room for price action to breed, probably in anticipation of a downtrend continuation. So now, with a well secured position at this juncture in the market, what is going to be our next line of action? What are our plans? What are we planning to do for today? Are we still going to be selling or getting ready to buy the USTech100? Well, before I go into the details here, I would like to delete this potential buy zone window here, which is no longer relevant with this current market structure. Now, the first thing I did this morning while trying to decipher where price action is likely going to be going for today, the first thing I noticed is that since Tuesday's trading session, it is quite clear that price action has been bearish in this market, and this is evident with a series of lower lows and lower highs you'll see on your chart right now. And in fact, I took a step further to connect the series of lower highs, giving us this beautiful descending trend line, which we shall be using to guide our trading activities for today's trading session. And in fact, as long as price remains below the trend line, we want to be looking out for patterns and structures that will support the idea of selling. Now, let's talk about the potentials of sellers at this point in time. Now, this is where our center of focus will be. Remember, we sold here at the breakdown of the $15,000 MAC. We saw the breakdown of the structure here. And one thing we normally expect when price action breaks down of a key structure such as this is a potential retest of that structure to incite a downtrend continuation. So if I will give a visual representation of what I'm talking about, so we saw the breakdown of the $15,000 MAC, and right now, since price tested the 14,850, we have noticed some buy pressure, which for me I will consider to be a retracement at this point in time, which of course we don't know when the retracement phase will mature, that is complete, before we join the downtrend scenario. So one of the scenarios I will be looking out for is either price action comes back to retest the $15,000 MAC to incite a downtrend continuation after noticing selling pressure around that area, of course, or wait to see how it will react to this descending trend line. And if I begin to see selling pressure around this area, then we want to be part of a downtrend scenario from this point. So we have two levels where we shall be looking out for selling opportunities for today. So the first one here is the $15,000 MAC, where if it comes into that structure and we begin to see selling pressure below the $15,000 area, we will just mark out levels to break down to join a bearish move. And then the second one is this descending trend line here, where depending on how price action reacts to that level will determine what our next line of action will be. Now, with this ones marked out at this point, I need some key levels here to help us guide our trading activity. Now, we have something along the 14,950, which is just right around here. So give me a moment. Let me label this one. You, of course, want to be marking this level out on your chart. So we have the 14,950 level, which also shares a confluence with that descending trend line. So let's see how the market will react to that area. So if price comes into the structure and we see selling pressure, then we get ready to join a bearish move. But if price action breaks out of the trend line and the 14,950, we shall wait and see what happens around the 15,000 area before considering joining selling opportunity at the continued selling pressure around that area, or the breakout retest to join an uptrend scenario. So these are the things we are going to be looking at on this one. So we have a trend line, we have the 14,950, and of course the 15,000 level where we shall be looking out for trading opportunities too. However, if price action does not climb that far and instead it continues to drop to the downside, then a breakdown of the 14,850 should be welcoming more sell position in this particular market. So it's quite simple, isn't it? We have a very simple setup. We have a trend line and a couple of levels here that we shall be using to guide our trading activities for today. So let's see how the market will play around the structure. This is where our center of focus is going to be for today. In fact, you do want to be marking out this level as you will be needing them as a reference point to guide trading activities for today. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next financial asset. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next financial asset on our watch list. So the next asset on our watch list for today is the XAUUSD, which of course have been doing pretty well since the beginning of the week. And in fact, the last 24 hours also gave us 3 positions in sell positions, to push price to the downside. And in fact, I was able to scoop over 300 to 400 pips on that single move that happened yesterday. So let's go into the details of what has really been going on since the beginning of this week. Now, at the beginning of the week, it was quite clear that price action has been bearish since the market opened. And in fact, to emphasize that, we had this descending trend line, as you will see, after connecting the series of lower highs in the last I think about a month or two now. Price has been finding that lower highs. Now, this was quite a good signal that we want to be looking out for selling opportunities, of course. Then in addition to that one, we had our key level on the higher time frame at the 1910, and price action was above this key level throughout the first I think 12 hours of the week. Price was above that key level, and it was at this point we were thinking that we might likely be witnessing a breakout of that descending trend line to welcome buying opportunity, which of course never happened. So all ideas of buying the XAUUSD was negated since price still remained below that descending trend line. And in fact, we had our first sell position right here when price action broke down the 1910. And in fact, for those who missed out on that opportunity, the market was kind enough to give us a couple of more retests of that structure to join that bearish momentum to the downside. So it was quite more of selling the XAUUSD throughout this week. Then during our live session yesterday, we talked about how important the area we are in right now was. So this was where we were during the live session, and I told us all yesterday that as long as price remains below the 1906 level, we shall be selling the XAUUSD, and the only condition that will make us buy is for us to see price break out of the descending trend line and the 1906 to capitalize on that bullish momentum. And in fact, we also had an ascending trend line here to help us be in that buy position if price action breaks out of that structure, which of course, as you know, never happened. So it was more of getting ready to sell. So we sold at the 1906. We sold again. We added more position at the breakdown of the 1903. We also added more positions at the 1900 area, giving us three positions and about close to 400 pips in profit on that one. As I had price, it's my TP target at the 1890 level. Now, for those who have been part of this sell position since the beginning of the week, well done to you for being on standby to capitalize on that move. Now, with a profitable position so far this week, we are going to be heading into the New York session today. And what is going to be our plans? Are we ready to continue selling, or are we going to be buying the XAUUSD today? Well, before we go into the details here, I would like us to scale up a little bit into the higher time frame. Let's see what we saw at the beginning of the week that made us to sell. Now, on the daily time frame of the XAUUSD market structure, we went to as far back as the last quarter of last year to see how price action has been playing out on this in this market. And of course, it is quite clear that price action has been bullish, and in fact we had a couple of bullish trend lines identified after connecting the series of higher lows, and of course price action has consistently respected this trend line. However, during the course of last week trading session, we saw a final breakdown of that ascending trend line for the first time in the last 8 months or so. We had the breakdown of this one, we had the breakdown of this one, which was a clear sign that sellers are gradually pushing price to the downside. Then, in order to help us guide our trading activity for this week, we had our key level situated at the 1910, where we said if price remains above that level, we look out for buying opportunity, but a breakdown will of course welcome selling opportunity. And if you look at what has been going on since the beginning of the week, we finally saw the breakdown of the 1910 level, and at this point in time it would make more sense looking out for selling opportunities here. So with this information here right now, things will be a little bit more easier for us to comprehend when I scale back down to the 1 hour time frame. Now, scaling back down into the 1 hour time frame, we are at a crucial point, and coupled with the descending trend line we identified at the beginning of the week, now price still remains below that trend line, and we have no other choice than to look out for selling opportunities. Now, if we zoom into what happened here in the last 24 hours, we have an impulsive bearish move, as you will see, and as soon as price tested the 1890 level, we saw some buy pressure, and in fact price action has been finding higher lows. And personally, I want to see this as the emergence of buying pressure building up behind the scenes. As we can see, higher lows continue to push price to the upside here, and for me, I want to consider this as a retracement phase at this point in time, unless the market state otherwise along the line. And if this is going to be a retracement phase, how long will this retracement phase go before another wave of bearish momentum will happen? So to get this, I was able to use my Fibonacci retracement tool, run it through those previous impulse leg, and aim at the golden zone area, which will be serving as our sell window. And of course, that is between the 78.6% and the 50% of the previous impulse leg, which falls within the $1,903.50 level and the $1,898 area as an area to look out for selling opportunities. So what we are going to be doing today is to see how the market would react to the sell window. So we have a situation right now where price is into this area, so we want to see some selling pressure resume around this area, or preferably a reversal pattern like a double top, head and shoulder pattern, or rising wedge around this area for us to feel comfortable to join the downtrend situation. So you want to be marking out this sell window around this area to help us capitalize on a downtrend scenario. Now, in as much as we're looking out for selling opportunities here, we cannot ignore the potentials of buyers too. Now, one of the reasons why I've said that is this. Now, look at, we've noticed some buy pressure around this area. What if this does not turn out to be a retracement, but in fact an outright uptrend continuation? How do we capitalize on that one? Well, I had a live session this morning where I talked about this potential of buying above the 1,895 after citing the breakout of the structure, which of course happened. Price came back to retest and I joined this bullish momentum here. And at this point in time, I have about 30 pips in profit right here. And if you took advantage of this opportunity, well done to you for being on standby to capitalize on that one. But one thing about this move is that it is more or less a counter trend opportunity if we consider the way price action has reacted to this market structure since the beginning of the week. So we want to be very, very careful here. So for those who had bought at the 1,895 level, you do want to be moving your stop loss to your entry point right now. Please move your stop loss to your entry point while we remain patient to wait and see how the market will be reacting to this zone around the 1,900 and of course that descending trend line to determine what our next line of action will be. And in fact, if we do witness a breakout of both the descending trend line and the 1,900 area, I want to be looking out for more opportunities to buy the XAUUSD. And in fact, we have multiple levels here that will give us multiple entries. We have the 1,903, we also have the 1,906, and I think we also have one more level. Okay, we have two more, the 1,910 and of course the 1,915, all of which we can use to capitalize on this bullish continuation if price action goes on to break out and retest those levels. So these are my views here on the XAUUSD for today. So we have two potential scenarios we've already marked out right now. We talked about the potentials of the buyers, which I told you I'm already in the buy positions right now, while I want to wait and see how the market would react to the zone to decide if we are going to be adding more buy position or getting ready to sell if continued selling pressure resume around that area on our lower time frame. And I also mentioned that for those who already have a buy position running, you want to be moving your stop losses to your entry point, secure this position, and let's see what happens around the 1,900-ish. So these are my views here on the XAUUSD for today. It's a very simple setup. Let's see how this will play out. And trust me, if you follow through with this plan, you will definitely be on standby to capitalize on any potential opportunity the market presents. So if you have any questions whatsoever as regards to the setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we move right into the last asset on our watch list for today. So I see your comment. Have I called Zeblion 8? Good morning. 2B, good morning. A Fisherman 420. How are you doing today? I've been asking after you since Tuesday, but I guess you are not around. Glad to have you back in, and I hope you've been monitoring the EURJPY very well. All right. Glad to have you around, Fisherman. Skyborn, good morning to you. Glad to have you around too. So in the absence of no questions, let's dive right into the last financial asset on our watch list for today. So the next asset on our watch list is the EURJPY, which was introduced to us by Fisherman 420 on Monday, and in fact we have been buying these assets since the beginning of the week, though we really have not seen significant traction in price action, as price has only moved, if you look at what has been going on here, maximum it has moved 45-50 pips on both buy occasions we witnessed on this chart, which is not that impressive at all. But we'll still continue to monitor price action, as things are looking very indecisive at this point in time, as price action is currently caught within that range between the 159.250 and the 158.850 level. In fact, I will have to readjust this resistance line to the 159.300. So I will implore you to do that too quickly, so that we can capture the highest point price action as being for this week. So this is it right here. So we are going to be changing this one to the 159.300 level, serving as the resistance line for this week. Now let's run through things quickly from the higher time frame. Let's see how this whole setup began and what led into the decision we have been making. So the first thing we did at the beginning of the week was to look at the daily time frame, where we saw that price action has been on a very strong bullish momentum, of course, and we were able to connect the series of higher lows here, and in fact it gave us a couple of trend lines here that has been supporting this bullish momentum since the beginning of this year. Then in addition to this trend line here, we had this, hold on a second, I think we had a key level situated at the 158.00 area, which of course was broken during the course of last week trading session. And of course, before the breakout, that level was a very strong selling niche, as you will see here, making it a very important level to look out for. And one of the things we agreed at the beginning of the week is that as long as price remains above that 158, we will continue to look out for buying opportunity, as retest of structure could turn out to be a trend continuation pattern to incite an uptrend scenario. However, we mentioned that a breakdown of the 158 could likely incite a reversal pattern to push price to the downside. So in order to position ourselves for this week, we went to the lower time frame to look at how participant in the market has been reacting to the structure above the 158 level. So when we scaled down into the 1 hour time frame, we were able to spot a range where price action was initially confined within. That was at the beginning of the week. It was right here. So this was where we were at the beginning of the week. So we saw this beautiful range here where price action was caught within, giving us a flat channel to work with. And you know how we do it in this community. When price remains above within a channel, we want to wait for a signal to happen, which will come in the form of either a breakout of the resistance line for an opportunity to buy, or the breakdown of the support line for an opportunity to sell. Now, in addition to that range is this ascending trend line, which of course we also highlighted and said we will be using it to guide our trading activity for this week. That is, if price remains above the ascending trend line, we continue to look out for patterns and structures that will support the idea of buying. Now, with the breakout of that range happen, we had a couple of buy position. Remember, we had one here. We had one here on Tuesday. We had a buy position. What's happening here? Okay. So we had a buy position here. Price action actually moved about 47 pips in our favor before the sellers came in. And I do hope you moved your stop loss accordingly. If you had done that, you must have been taken out with a modest size of profit. Then we also added another buy position here again. That was yesterday's trading session. We saw another opportunity, capitalize on that one. That also moved about 45 pips, and if you had moved your stop losses, you must have been taken out with a modest size of profit. So far this week, it has been quite more of a consolidating market structure. And if you look at things closely here, it is quite clear that since Tuesday's trading session, price has been confined within the 159.300 and the 158.850 to further emphasize the level of uncertainty in this particular market. And you know how we do it in this community. When price action falls into such a range like this, we want to remain patient, waiting for a signal to happen, either in the form of the breakout of the resistance line for buying opportunities or the breakdown of the support line at the 158.850 for selling opportunities. So this is where our center of focus is going to be for today. So let me just mark this one out right here. So we are going to be focusing on the zone for today's trading session. So we are looking forward to either a breakout or breakdown of that range for an opportunity to buy or sell. Now let's take it a step further. Let's zoom right in and see what is going on here. So right now we saw how price just broke down that ascending trend line, giving us a signal that we might likely be seeing a momentum shift. But price actions finding buy pressure here at a level which has a memory for buying power. So there are two ways to which we can capitalize on a downward scenario here. That is, if price will continue to go to the downside after breaking down that ascending trend line. So one way to look at it is this. Now with the breakdown of the ascending trend line, we want to see if the buy pressure will resume again to push price to come and retest the ascending trend line that was broken. And in fact, if this happens, we want to be getting ready to sell at the appearance of selling pressure below the structure. Then a further breakdown of the 158.850 will welcome more selling opportunities. And remember that we acknowledge more levels here, where if we cite a breakdown of the structures, we shall be adding more sell position to our existing trades. So you do want to be marking out this level to capitalize on a downtrend scenario. Now, that is how we are going to be selling for today. However, if this platform at the 158.850 continue to hold by pressure, then we are likely going to be seeing an uptrend situation here. Now, what I will be looking out for here is if price action turns out to a reversal pattern like this, maybe like double bottom structure or a higher low sort of a thing, then I want to be buying at the breakout of the neckline. Then I want to move my stop loss accordingly when price gets into the 159.00 area, which also shares a confluence with that ascending trend line I talked about earlier, where I said it's likely price will come to retest the structure and appearance of selling pressure could incite a sell-off. So once price gets into this area, we move all stop losses for this buy position to break even. Let's secure the position and wait to see how the market will be reacting to that zone at the 159.300. Now, if a breakout retest of that zone happens, we want to be adding more buy position to our existing trade, where a selling pressure below that level will likely incite some selling opportunities that might take us out of the buy positions. So let's mark all these levels out on our chart. And to do a quick recap here, we are looking out for buying opportunity only if we see reversal patterns like double bottom structure above the 158.850 to join. Then I told us all that once price gets close to this area, we move all stop losses on the buy position to secure that position while we wait and see how the market will react to the 159.300 zone. Now, like I said, if price finds selling pressure below this area, then we get ready to sell, which will take us all out of the buy position, and price continues to the downside, and we have levels here that we shall be using to capitalize and maximize the potential of that bearish move. However, if price breaks out of the 159.3, then we look out for more opportunities to buy. So let's mark all these levels out on our chart, as we shall be needing them as a reference point to guide our trading activities for today's trading session. So I hope this is very well clear, and if you have any questions as regarding to this current setup, feel free to let me know in the comment section. Trust me, I'm here. I'm willing to be of help in that regard. So let's see if there are any questions whatsoever before we move into draw the curtain for today. So I will be taking the next 10 to 15 seconds to see if there are any questions. All right. So, in the absence of no questions, I want to assume that we're all on the same page here. And I saw some comments here 459, 823, 6658. Good morning to all of you. You guys have been so wonderful today. So, it's on this note we shall be calling it a day here. And in fact, we were able to attend to 4 financial assets. We treated the US All Spot, we treated the USTech100, which is popularly known as the NASDAQ. We also treated the XAUUSD, popularly known as the Gold Spot, and of course treated the EURJPY, which was introduced to us by Fisherman 420 at the beginning of the week. And in fact, we were able to identify simple setups that we are going to be using to guide our trading activities for today. And I do hope that you mark these levels out, as we shall be needing them as a reference point to guide our trading activities for today's trading session. So on this note, I want to wish us all the best of luck. And for those who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed today. And I encourage you to be part of our subsequent edition, as the more time you spend with us, the better you get in understanding how this works, and eventually be able to use the information you have gathered here to make your own independent trading decisions. So it has been a wonderful moment with you. I see your comment, Fisherman 420. Glad you have found it interesting, and I look forward to seeing more of you tomorrow too. So on this note, I wish you all best of luck once again, and do have a wonderful evening, everyone. I look forward to seeing you same time tomorrow as always, 10 a.m. UTC, 11 a.m. West African time, as we come back here again to review how well these assets have been doing, and at the same time get ready for the last trading day of the week, which promises to be another interesting and insightful session. See you around again tomorrow, and do have a wonderful evening. Bye bye.